The fourth quarter of 2012 turned out to be another interesting time for us as we experienced excitement, tension, devastation, and suspension. This seems like it's becoming the norm. In October, Hurricane Sandy roared through the eastern seaboard, leaving a trail of devastation. In November, we finally reached the end of another sharp and often bitter election cycle. And in December, Congress added more drama by continuing with the status quo with the negotiations of the fiscal cliff dilemma. Europe, for the first time in a long time, was relatively free of alarm, while real estate showed improvement. During the fourth quarter, the S&P 500 index was down over 1%, which represented its first negative fourth quarter in 4 years. However, it finished the year up 13%. The Dow Jones Industrial Average was down nearly 2.5% for the quarter, but finished the year up 7.2%. Also, the NASDAQ completed the quarter down 3.1% and finished the year up 15.9%. Congress technically missed the year-end deadline for the fiscal cliff, but managed to fix it on New Year's Day, which resulted in major tax law changes. The temporary 2% payroll tax cut was repealed, which means higher taxes for all working Americans in 2013. The top marginal tax rate increased back to 39.6%, as well as the top estate tax hiking up to 40%. We also saw the individual estate tax exemption decrease slightly to $5 million compared to the default $1 million if changes were not made. The Bush-era tax cuts were made permanently for 98% of Americans. Also, unemployment insurance was extended for at least 1 more year. For investment tax rates, dividends and capital gains tax rates were capped at 20% compared to going to ordinary income tax rates, which was proposed. Other economic indicators included seeing jobless rates declining to 7.8%. Inflation, however, turned out not to be a factor. It declined very little during the quarter and finished the year just below 2%. From a global perspective, the outlook for China grew brighter in the latter part of the year. At one point, 2012 was looking to be the poorest year for China since 1999. Europe's 4-year-old debt crisis was still an issue. However, the European Commission approved a €37 billion rescue package, which helped keep things quiet for a while. Foreign stock markets experienced gains in the fourth quarter as we saw momentum increasing in Europe. Overall, the commodity sector experienced a rough fourth quarter. Silver and gold both dropped 12.6%, although they did finish positive for the year. National gas futures soared and finished the quarter up 12.1%, but oil fell and was down 7.1% for the year. In real estate, we heard pleasing news. We saw gains in existing home sales, finishing off at an increase of 14.5% in the past 12 months. Home values also showed an increase of 4.3% gain across major cities, which is the best yearly advance it has seen in 2.5 years. Home loan interest rates also declined in the fourth quarter, thanks to the Feds, with loans falling in the mid-2% range. We're still facing a cloudy stock market for 2013. There could be arguments made for both a bull or bear market this year. Congress will be dealing with the debt ceiling shortly, and it's not expected that the discussions will be friendly. There will be talks of tax reform, spending cuts, and entitlements. The job market is still a major concern, and there seems to be a lack of progress for middle-income Americans. The median household income is still less than the median income back in 1989. With record amounts of money sitting in historically low interest saving accounts, there could be a push back into stocks if consumer sentiment changes. Car sales, however, are rebounding and consumer confidence is increasing. We have also seen conditions in Europe improve. If you would like more information, please contact your relationship manager. We look forward to speaking with you, and we thank you for being a valued client of LifePlan Financial Group.